Hello, everyone. It is 11th of January and Thursday, and there is significant change on the overall points. So we're going to check that out because it's very important. And also, I identified something on the market that we can use probably very nicely, but probably for not a very long time. So here we go with the Bitcoin ETFs, and also there are happenings on the stock market, on the forex market. So let's start with the macroeconomics as we usually do. This week, the week is currently neutral. There's not much changed in the macroeconomic field yet, but don't forget that today we're going to get US yearly CPI numbers, which is very, very important, and it will definitely move the market. So I would really recommend to watch the data, which will be published in 1 hour and 50 minutes. So yeah, definitely worth. But so far what we know is that the Swiss CPI went up to 0.0%. Not a big change, and also not a big effect on the Swiss franc. The EU retail sales, however, dropped back to minus 0.3%. That's a little bit interesting backdrop. According to the Christmas time, we expected this a little bit more positive. And as I mentioned, if that data comes out negative, it's supposed to be a not too positive insight into 2024. Now, the US consumer credit become 23.8 billion. That's way higher than it was previously, 5.1 billion. So it's an interesting information that people are getting more loans, a little bit more loans for the Christmas time. I mean, they got in December. But the level of those credits are not very strong. We definitely expected way higher, and that's also not a good signal to the first half of 2024. Now, the Tokyo CPI, the core CPI, which is a yearly data, declined from 2.3% to 2.1%. This is pretty good, but as you all know, the BOJ has to concentrate on the price of the Japanese yen. So so far it's just a confirmation that the monetary policy change, what they said probably going to happen, it still could be delayed. So not a bad sign. It all will depend on the yen, the price of the yen, and of course, because the DXY is highly dominant above the yen, that will depend on the DXY as well, which we're going to take a look today. The Australian retail sales climbed back to 2.0%. That's a really good, really nice surprise. And I think that's something, finally, one country which brings the expected delivery. So it was minus 0.2% previously, which has been revised to minus 0.4%. And then we jumped to 2.0%. That's a pretty positive data for the Australian dollar. So let's see how the US CPI will dominate the Australian dollar today and maybe tomorrow with the core PPI and the PPI numbers as well. So the EU unemployment rate went back down to 6.4% after a previous 6.5%. I think it's not too bad, but not a big drop compared to compared to the November data, and according to that, well, this is a December data as we all know, and it's supposed to be 6.2% at least. So it's still signaling that the employment sector in the European Union is not too strong, and I'm very, very wondering how the January-February data will be. But we already talked about a lot. So Australian CPI on Wednesday came to 4.3% after a 4.9% previous. That's a fair decline, but it's still too high, I think. And the Chinese new loans data has been delayed. I don't have the exact date when the data will be published, but I will let you know definitely. Crude oil inventories went back up to 1.3 million after minus 5.5 million. This could have a little bit negative effect, but as I explained that to you last week and also on Monday, that's not the most driver of the oil prices right now. So overall, this is a pretty much neutral macroeconomic effect on all market sectors. And if you see the points, and this will be the big surprise today, we stayed on minus 12 points with the ETF and index market. So there is no change. The commodity market has no change as well. It stayed on positive 16 points. The Forex market has an unchanged minus 11 point effect from the macroeconomics. Don't forget that the maximum is 25%, which is 25 points, and we don't use half of it on negative territory. We started to climb back in November, so it's still a very interesting data because I expected some decline by now. But at the same time, we talked about the possible little bit more positive Christmas data. Now, the overall picture doesn't really show a very positive Christmas data, and that was the bad news. So whoever is thinking on the long term, that might be not the best environment according to the macroeconomics, but also that this is just one of the 6 drivers. So we are not finished yet. That could be one of the 5, which is one of the 6, sorry, which is negative. In terms of the Forex market, the macroeconomics has an unchanged minus 11 points effect. So this is still a negative effect, but it's coming back, which is interesting in that term. So as I said, the stock market has an unchanged minus 14, which is the lowest. And that's also a very surprising data because right now we see the positive movements a little bit, and the macroeconomic effect is just unable to improve behind the stock market. So that's something is really, really dangerous, and we need to keep an eye on that. But I'm gonna tell you that when we are analyzing the overall data. But this is very negative, so negative minus 14 points. And here's the crypto market, which has a negative minus 12 point, unchanged compared to Monday. And well, I would say this is neutral, but overall is in very largely in the negative territory. So again, this will be a controversial information when we see the overall points, but I'm going to explain that to you, so don't worry about that. Now, the thing is that there is no change in the geopolitical field. So we got completely unchanged points in ETF, commodity market, Forex market, stock market, and crypto market. And also there is no change in the corporate earnings. But I would like to highlight that the bank sector will start the Q4 earnings season. I think it's going to start tomorrow. So probably I'm gonna report to you on a Pro Discord server a couple of information about those. Because as I mentioned to you, this Q4 earnings is very important, and also the Q1. So we should not take the final conclusion after the Q4 earnings, because we need to see the Q1 as well, so that we can actually see the projection of the company performance overall by sector. So I will be very strongly watching those data and will report to you. But because I have to following too many companies, probably what I'm going to do is I'm not going to give you a very detailed analysis by each of the companies I'm following, but I try to give you the information and some insight, some update about how this did change or didn't, because overall we know all the earnings and we know the company's performances, and therefore I think all I'm going to give you on the Pro server is the final conclusion after the Q4 and the Q1 as well. So very exciting times are ahead of us. Now, the market news and events does not change a lot. Of course, there is one of the biggest news right now is the crypto. There is a mass approval. We got 11 spot Bitcoin ETFs got approval by the SEC, which we knew that 24 hours before it's happening, but it was fake. So it's weird that the SEC's Twitter account has been compromised, but yeah, we are living in a strange world in 2024 as well. But there is 3 news I would like to highlight. One of them, which may be later on affecting the ETF and the stock market. The US and the UK warships shot down Houthi barrage in Red Sea. which is a type of escalation, because right now that means the US and also the UK, which is a little bit surprised to me, is aggressively start to get involved in the Red Sea conflict. And therefore, we really need to watch those news, and we really need to start watching what's happening on the Red Sea, because if this will be a start of the escalation, then we're going to see very strange things in the next 2 months at least, and hopefully only for the 2 months and not anymore. Now, the energy market has a positive news. The oil prices firm as Middle East tension heat up because of those. So that was an obvious after effect for the energy market, which we will have a look today on the chart. The Forex market news environment is unchanged, and I just left the previous week's news here that the Red Sea crisis boosts shipping costs and delays and inflation worries. That's a very important information, because what I see right now in the market, this overall positivity is very, very inflationary. So we are attacking, not attacking, but helping inflation to create an environment where we could come back to positive again. That would be very bad, by the way. But not only from the commodity market, now we're experiencing that from the Forex market, from the ETF market, from everywhere technically, and that could be a danger, not for tomorrow, but maybe for next month or the month after. So we need to keep an eye on that inflation situation. And this is why especially the US inflation today will be very important, because remember, we got the new inflation numbers, for example, from a couple of countries, and we already experienced in a couple of cases that the inflation has started to rising back. Not hugely, not very important, but it's also a turnaround from the low point. I'm really wondering if we're going to see that from the United States or not. But once the data came in, we will be able to calculate with that. So market sentiment, which is very interesting. So let's start with the ETF index and the stock market. The finance sector is pretty much neutral compared to the Monday data, but is in negative territory in terms of the market sentiment. The health sector is also neutral, but in positive territory. So there is no decision yet in the last 3 days how those sectors' sentiment will develop for the next week. But this is definitely a slowdown in both directions. So probably there is a possible turnaround on both of the sectors. The tech sector, however, improving a lot. It was very negative on Monday, and now we are stepping into the positive territory. Not strongly, but slowly we're getting there, which is very interesting. So that means some of the volume is starting to pour into the market. And when we take a look at the charts today, I'm going to tell you a couple of more information about that. The retail sector is improving, but it stays in neutral, or it gets back to neutral. So there is no huge positivity in the market sector, within the market sector, but that's definitely an improvement. However, the consumer sentiment is keep declining. It was declining on Monday as well, but not too much. It was stayed in positive territory. Now we are stepping into a negative to neutral, or neutral to negative territory in terms of the sentiment. Now, the car industry is also improving in sentiment, but it's very weird because Tesla, technically, I'm not saying this is the only one car manufacturing company that it is not able to improve on the market or drive the sentiment to positive territory, because there is a couple of more, but not too much. So the rest of the market is pretty much positive, while the transportation is also improving and it's stepping into positive territory, very similar to the car industry. And the energy sector is declining a bit, so there is a huge profit taking right now. And I think this will be one of the most volatile market sector in the next 2 weeks. So I think if somebody is following the momentum, that could be a good opportunity if you like to shorting and buying, so like swing trade or something like that. Now, if we go to the commodity market, that's a very interesting development, because the essential food category is actually improving in sentiment, while the non-essential food category is also improving. This is a very rare scenario, and I'm like 90% sure that this is This is a volume escalation situation in the market. So as I told you on Monday, we need to be ready that the volume is actually started to increase on the commodity market. That's a good news again for traders, because that means we're gonna get volume, we're gonna get momentum, and that something is preparing in the background. Now, I think the inflation data will decide whether which market sector within the commodity market will improve for a little bit longer, for like 1.5 or 2 weeks. So we are better following this one. Now, the energy sector is still positive in terms of sentiment, but it's declining. So there is no surprise why energy-related stocks are also declining, and why we got the profit-taking time right now. While the precious metals sector is just a little bit improving compared to Monday, but it's still in neutral. So gold and silver will be heavily watched by me, whether we are able to break to the upside on, especially on the gold zone, or not. But as you know, this is hard. This is pretty much based on fundamentals, and we need some really strong market uncertainty or panic to see that the gold is breaking out, because this zone is technically the most important zone in gold's history at the moment. Now, industrial metals are improving just a little bit, but with just a little bit, and staying in negative territory. I explained that to you on Monday. There's no surprise. The reason why this is happening, because obviously we have a very slow economy right now, and I still don't see that the industrial metals will see a very much interest in the upcoming 2 to 3 months at least, and yeah, maybe afterwards, but it will depend on the Fed as well. Live stocks are completely neutral but staying in positive territory. So the overall point, as you can see, is like neutral, because we see the improvements. Also, we see some non-improvements. Some of the sector is staying in negative. Some of it is just stepping into slightly positive territory. So this will be a pretty much neutral point where we're going to see the overall points, while the ETF market is, as you can see, also improving in terms of sentiment if you see the overall pictures, which is very weird at this time, but we're going to see the overall points as I promised to you. But there is not much change on the Forex market. As you can see, the DXY is non-moving, it's neutral to positive, but there is no change since Monday. The EXY is improving a little bit. Banks are started to transfer a little bit more on that region, while the Japanese yen is declining. So now that's a weird change, because as we see now, EXY is gathering some power, which I was really blaming the euro in the last couple of weeks, because it was very, very weak. And now, well, this is true only the first sign, so we can't say that this will be like permanently a strong currency, but at least now we see some signs of life from the euro, while the Japanese yen is declining back, and that could be that could give some worry to the BOG. I will be watching those statements, what they gave out in the next 2 weeks. The British pound is also improving, but it's staying fairly in the neutral territory, while the QE is also staying in neutral but declining back just a little bit. And the Canadian dollar is completely unchanged in terms of bank sentiment. This is neutral to negative right now, like very similarly than the Austria dollar is a little bit better just, but there is no change. But there's also no change in terms of the Swiss franc, which is completely neutral. So as you can see, this is a very uncertain market right now. So the market doesn't really know what to do, because the DXY is unable to move. As I told you on Monday, this is between two fire, and it will be very hard to change that state into any of the directions. So we need some really serious geopolitical or macroeconomical trigger on that market. So now let's see the crypto market. I don't think that I have to over-explain that situation. So we got neutral on Monday, and since that time we are improving a lot, obviously because of yesterday's news. So that's very positive for the market sector. So just not to forget what we talked about, the ETF market in terms of market sentiment. And here we go. So that was a -2 point on Monday, and now we are going back to zero. So this is not a huge improvement, but we are going back to completely neutral, which could be positive very soon if the market is sticking to the movement. What we see here, I think that will be determined by the US CPI numbers today and the PPI numbers tomorrow. So very, very important macroeconomic 2 days. What we are having now, not because there is too much data, because there is important enough data to drive the market. So please watch those data and the publication. But as you can see, the sentiment on the ETF market is very uncertain. So we went back, that was actually at the end of November, where we went back to this, let's say, the zone. And I mentioned to you on Monday that we can draw a theoretical line between 5 and -5, and if we leave any of those lines, we can confirm some longer term effect in terms of the sentiment. So we are right in the middle, but we are improving compared to Monday, which will lift the overall point in any way. Well, in light of this, the stock market is also really weird, because that was -4 in decline on Monday, and the market sentiment point is going back to 1 in positive. We did that, I think that was 14th of December, but we did that once, and then we declined back immediately to 0, the -1, 0 back, -3, -4. So some decline started, some bad mood started over the last weekend on the stock market, and now we are coming back. And this is especially important because I was investigating also small cap and large cap stocks. And as I see, the large cap stocks are gaining sentiment again, which is interesting. It's very interesting because the volume is coming back to the market. So let's see how the market will digest the type of volume we get, and we need to investigate where the volume is coming from, which is most likely from hedge funds. And I want to see what kind of game they are making, and I think the options market will talk a lot about that, but not now, a little bit later. So I'm going to keep one of my eyes on the market sector. Now, let's see how the commodity market is with the sentiment. As we see, there was a +3 point on Monday, and now we are going back to +4 points. That's a pretty good result, because even on last week we had 1 only. So we have a continuous increasing in the point, and I think that will help to the overall point a lot, which is very positive. Here's a Forex market. As you can see, this is completely unchanged. We talked about that. So no surprise, it's staying on -2. And when we see, or we take a look on the technical charts, you will understand why this point is actually -2, because there's a lot of uncertainty on the charts. And so here is the crypto market sentiment, which was 9 points on Monday. And now we are going back to +14 points. I don't think it's a surprise, but this will help a lot on the overall points. And so let's see quickly what's going on with the technicals. So, well, let's take the crypto market first. As you can see on the crypto balance, that picture is, by the way, it's a late picture. Now we are back to the yellow lines up here. I'm sorry, I couldn't change it right before the live stream, but I'm gonna refresh or update the document on the website for the pro members, so you will see the right and actual data. So we came back to the yellow line, and with a new higher high, by the way, with on the crypto total market cap, sorry, on the crypto market. And that's very positive for the balance, because also the MACD is already, you don't see on the picture right now, but it's already very close to a crossing again. So probably the stock MTM will be able to stick a little bit above the 40, and we are continue to do this rising structure to the upside. While if you take a look on the crypto volume, you see this is the volume from the last week, and right now we are coming back hardly above the blue line. That's a very, very good news. So again, volume acceleration. Very similar situation what we are experiencing on the commodity market, ETF, and the stock market as well. So volume is coming back up, and that's very positive for the crypto market to us. And therefore, we need to judge the technicals that is rising. So that was 1 point on Monday, and now we're rising back to 5 point in positive. That's a big jump, by the way, when we're talking about technicals. So I am very, very not only hopeful, but I'm very positive on the market for, especially for short-term movements. But again, we're going to see on the charts, because also remember, what did I show you on Monday? I'm going to update a little bit with the crypto chart. So the overall point on the crypto market, according that the technicals are rising as well, we are coming back from 8 to positive 10 to 23 overall point, which is coming back to the consolidation zone. And if we can leave the consolidation zone, that means we need to break 36 points. That was the highest point within the consolidation. So if we can break that maybe on next week, maybe at the end of the next week, that will be very, very positive, and furthermore confirming the longer term bull trend what we was announcing previously last year. So mainly the market is bullish. We are experiencing upside breakouts on different altcoin charts, and Bitcoin is looking pretty good, by the way. Not as good as most was expecting because of the Bitcoin ETFs, but yeah, if you're wondering why, you better watching the podcast what we made last week. So technically the power, so the fundamental effects behind the bull trend, what we're seeing right now, is coming from the geopolitical sector, the news, which is not as surprising, and the sentiment, the market sentiment. But we also have danger signals like the macroeconomic area, because it's negative. It's completely against the current trend right now. So we don't know how much trouble this can cause if there is something pops in the macroeconomics. You know what I mean, especially with the Fed decisions, etc., etc. So yeah, technically right now we have a very nice bull trend. It's backed very nicely by the usual crypto sentiment, but at the same time, you know, I'm not very, very calm, because here is the very negative macroeconomic effect on the crypto market that's still pose a danger to the market sector. But overall, we have a general risk of crypto markets, so there is no particular we need to highlight as a risky sector. And the main risk is just the usual technicals and a possible financial downturn, as I mentioned, with the macroeconomic negative effect. Now, let's see the stock market, how this ends with the technicals. That's really interesting, but since I mentioned that the large cap stocks gained some volume and some momentum to the upside, I took a deep look on the large cap stocks chart, the technical charts, and most of them improving. Well, I experienced it. There is no proof of long-term improvement in terms of rising, but there is definitely proof of short-term improvement on the charts on lower time frames, and therefore the -8 point was actually improving a little bit to -4. It's still in minus territory, but this is a huge improvement. That's the second time we do that within, well, a little bit more than 1 month, because as you can see, it was the same situation in November that we got -8, and then we got a sudden spike to the -4 point. I'm really just wondering how the market is capable to keep that short-term positivity on the market. Again, that's because volume came into the market, and most probably from hedge funds. So the overall point, what it shows us, is another surprise, because from -53 we are going back to -42. That's a huge jump, and it's still, of course, it's still negative. Is somebody asking why it's negative? Because like Nvidia is very high, Microsoft is very high, you know, large cap stocks are very high. Yes, but if you take the overall stock market, if you're really investigating the stock market, by each of the sectors within, you will experience that most of the charts are actually still in bear trend since 2021, which is weird. But again, I understand the hype, and I just understand everybody is really focusing on the ones that they are actually going up. But there is a lot more chart which is actually going down. Now they started to improve a little bit as well, so that's why this huge point improvement, but it's still in negative territory. So that's why I'm saying that there is no proof of long-term improvement, but there is proof of short-term improvement, which brings me to the conclusion that if you are anticipating on stock market, that you probably, the best strategy you can bring it on right now is momentum following strategy. And where the momentum goes, you should start riding those waves, because either to the upside and to the downside, not for long term, for really short term with scalps, because that's a very nice environment right now to scalping on the market, especially when we believe that hedge funds are driving the volume. That means stable volume, and of course the direction can change very quickly on the charts, but the volume is stable, and I kind of like this environment. So scalping up, because that's very good. So the direction is very mixed, as I mentioned. There is no entire market in bull trend or bear trend, but we're experiencing bullish momentum all over the place. And what I would like to highlight is that on Monday I told you that one of the main risks we need to take on is the technicals. If we don't watching the technicals on the right way, we might miss some of the opportunities or the main danger for an open position. And that's what happened, because it was one of the most jump on the points is the technicals, and that has 20% driving power of the market. So it's a huge point, it's a huge jump, and therefore, and this is another proof that why hedge funds are there, because hedge funds love to trade short term by the technicals, and therefore I think we should stick to this and following momentum by the technicals on those charts. So the main risk on the market is still could come from the geopolitics, the macro, and the sentiment. So some trigger has to be done, because the environment is set. So everything is set for a very unfortunate situation on the stock market, and it's just waiting for the trigger. But we still haven't seen the trigger. Of course, there was no such a macro data at the beginning of the year that it could trigger, or that there was some potential, but it didn't happen. But as you know, we still have to wait for the Fed next announcement. We still have to wait for the data, not only for the December data, but we see, because I highlighted that last year, that the data we are receiving in January is coming from December, and because of the Christmas time, we can expect some of the data will improve, definitely. But that's the problem, because we see that in the background, for example, industrial production, manufacturing is not improving at all. But at the same time, we see that maybe there is a slight chance that inflation could come back, and that's a danger. So why we can understand that, for example, the market is positive on large cap stocks, short term, there is bullish momentum. We can ride this wave to the upside if we have opportunity, but we need to really be careful, because if we get the trigger, what could be a problem? For example, extended war in the Middle East, etc., talked about a lot nowadays. So yeah, just keep an eye on those details, please, and I'm gonna update you anyway. The forex market technicals are coming back to positive, which we wasn't there since the end of September. That's the first time since that we are coming back to positive, and we got 1 point. And I think this is let's say in a way, is a major escalation on the forex market, because the sentiment is -2, so there is no huge volume on the market, but there is improved technical picture on the market. And this brings to us to a very strange point, because after I saw that the ETF overall points, the stock market, the crypto market overall points, everything is going up nicely, a little bit more than I expected. This point on the forex market, the overall point, is not going up with the pace than the others. and that's a little bit concerning. So we're still increasing from -15 to -14, which is very nice, but it's not huge. And therefore, when we're investigating the forex market, we need to keep that point in mind, because that will decide about how long-term or short-term plans can be, executed. And I think this is a proof that we shouldn't necessarily think on long terms at the moment, but you're going to see on the technical charts anyway. So the overall market conclusion is that the market is obviously very mixed. Some of it is in bear trend, some of it is in bull trend. But we're experiencing some kind of breakout, and we are still slowing down within this breakout. And again, a very similar situation. On Monday, I told you that we should take, we should focusing on the possible technical surprise, the technical changes, and now we got the proof that we are going back to positive points. So the technical change has arrived. The question is, will the momentum follow? And I think this is mainly depending on the inflation numbers that are coming out today, and the PPI numbers also on tomorrow. So we're still depending on technicals, but the technicals also proving that it has a huge influence on the market. So whoever is on the forex market, I would recommend rather a structural trading mostly, but not the momentum following trading, because you don't have enough momentum. And we could get a trigger. Maybe the market is really start to accelerate volume with the CPI number, but we need the proof of that. We need to see the volume on the chart that it's coming back. Then we can return back to momentum following trading or scalping. The overall point, first of all, the technical points on the commodity market is also improving. So it's going back to from 0 to positive 2 points. That's according to most of the technical charts I was investigating this morning. And I think that's some hope, because we were in 0. I was a little bit worried what is happening with the commodity market. That was really weird, but it seems to be we are just fixing the problems on the sector. So therefore, the overall point is also going back from 42 positive to 45 positive. Nice increase, and also that's the same high what we was achieved at the end of December, and technically we're just 1 point away to prove that we're building to the upside with this overall point, which is a very, very good outlook to the commodity market. But if that's a good outlook for the commodity market, that's also going to prove some of the inflation going to come back in the next 2 months, as I predicted. So this will be very interesting to see how this unfolds. So the direction is very mixed, but it's stabilizing, as I said on Monday as well. We started to increase more volume on the commodity market, and I am very happy to see that. But everything else, it's unchanged. The most risky sector right now is the energy sector. So if you're not experienced on that, you better just watching and learning or having questions on the Discord server. But it's better not to touch it until you not gain the right experience. However, the main risk is still coming from the geopolitics. So keep an eye on that, definitely, especially on the commodity market, because that could be a game changer. And here we go with the ETF market lastly. So the technical point on the ETF market is also increasing, not as much as on the stock market. So on the stock market, you remember there was -8 point, and we went back up to -4. It was only -7 here, and we went back up to the same -4. So that's just 1 point less increasing, but it's also increasing. The weird thing is that we finally started to decline, even on Monday as well, and now we're sharply returning back to the consolidation phase of this data, which I'm really wondering what we're going to see on Thursday. So when I show you the technical charts, you will experience the deeper explanation of this point. But the overall point is coming back to -33 from -41. This is a very nice improvement, but it's still below the overall consolidation. So the market is still weakening, but so it's improving in short term. We see the hedge funds volume is coming in, but it's not good enough to back a proper bull trend right now. And it's a very controversial information because that's not what we see on the charts. So technically, the conclusion is that we are on a possible bull trend turning point still. And yes, I understand we are going up, but this is still unchanged. You will see, for example, on the S&P 500 charts or the Nasdaq or the US 30 charts. So this is still the potential turning point. We are very close to clarifying that we are not going to turn, but it's still the turning point. Now, the direction status of the market sector, I mean, in overall, is that on Monday I told you that we already confirmed the turning point with this decline and with the price action as well. But now we are coming back to the state when we can say that the turning point is unconfirmed, but it's still there at the moment. And one thing I would like to highlight is that the technicals are losing the driving power because we're getting closer and closer to zero, which is completely neutral. But this could cause a really huge spike on the volume once we're breaking out to any of the direction after we're reaching or getting even closer to zero. So just keep an eye on that. The volume is going to come in from that point. But when you're asking, okay, but into what direction the volume is going to come, if you take a look, that usually the so the long-term effects on the market, especially on the ETF market, is always lagging, but the macroeconomics and the geopolitics, and especially the corporate earnings. And we know exactly the corporate earnings are starting to come out next week, especially with the bank sector. That will be the first. So we need to start focusing on that, because this could trigger the volume, which could trigger the technicals, and therefore, if we're still waiting for a turning point, the first real chance to get a trigger for really turn the charts to the downside, it will be the earnings season. So I'm very, very interested to see those. Well, that's the overall points, what we already got. And when you're analyzing the charts technically, please don't forget what was the point and calculate those points into your plan. Now, let me give you some updates about what actually happened since Monday, because there was a lot of charts I show you,